Right, good afternoon to everybody. We're very pleased to be joined by Matthew Bending, the CEO and founder of Space and People, and Gregor Dunlay, the CFO, and they're here to tell you about the 2015 results that were announced yesterday and the prospects for the company. For those of you who are new to the webinar process, I'll just remind you that you can submit questions via email. You'll see an icon on the top right of your screen, and Matthew and Gregor will be delighted to deal with those questions after the formal presentation. But now I'll pass over to Matthew.
Well, good afternoon, everybody. This is our first webinar, so if it isn't as slick as BBC, I apologise in advance. We have got an investor presentation which is on your screens as we speak. I don't know, do they have a split screen or something? Yeah?
We'll alternate.
Oh, right, okay. The financial results were published, and rather than just trot through the numbers methodically, I thought it'd be better to give you the narrative behind the numbers. The key aspects that I would want to talk to you about today are the way in which that 2015 was in fact a transition year for Space and People. This time last year, when Gregor and I were sitting here in equity development, we were talking about what a bad year 2014 had been, and what great new products we had in the pipeline, such as MPKs and pop-up retail. And we probably had our fingers crossed underneath the desk. I'm pleased to say that this time this year, we're sitting here and we can talk confidently about those products which are really gaining traction and developing very, very well. So the key things that I want to talk about is the development of the MPK rollout in the UK. On top of that, I want to talk about our venues that we've won, notably Network Rail and British Land, and the interesting pilot that we're dealing with in France with Imotion, which is the property arm of Auchan. Overall, the highlight though has to be winning Network Rail, which we won from a very, very established incumbent. That contract was signed in October last year, and really we didn't really see any significant revenues in Q4 of 2015 to affect our numbers. If anything, we had to staff up, particularly in the London area, in the London office, to deal with that. It's things such as an HR specialist, HR health and safety specialist, and obviously Network Rail liaison teams. That contract is bedded in very successfully. We're starting to see significant revenues and revenue pipelines develop for 2016, and we are very confident that not only is it delivering revenues directly for Network Rail, but it's acting as a massive funnel for our brand and agency team based in Glasgow, and we are seeing significant interest in our overall portfolio because of the success and the visibility that that contract win gives us. Nancy and the venues team also won British Land towards the end of last year. We are rolling it out on a venue by venue basis, and we see the potentiality in their outdoor retail parks as being very, very great. We have got a large pipeline of business ready to transact. This won't be as quick as normal, however, because a lot of these activities will be down to planning regulations by local authorities, things such as eco car washes and stuff like that, which need approvals. And finally, we've at last managed to tap on the French market at a very low cost to Space and People. Auchan are one of the largest retailers in the world. They have 89 shopping malls in France, and we have signed a pilot project with them to roll out our MPKs in 2016 in 5 of their biggest centres. We will be sitting down with Auchan end of Q2, middle of Q3 to see whether or not this pilot has worked for both parties. We are hopeful, and if it does, obviously we'll come back to the market and let everybody know. So on the MPK side, I'll just put an image of one up. This was our new MPK in Charing Cross Station. The mobile promotions kiosk is a new departure for us. This time last year we had 4 units on site. We've now got thick end of mid-50s, and we will are averaging around about mid-60s% occupancy, which is higher than we'd anticipated. Highest occupancy was over Christmas, which was around about 85% occupancy. The demand for this is being driven by customers, as in promoters who want to get back into high footfall venues at a lower cost and without the capex cost of creating their own unit. We also have a marketing team which supports the development of the unit, in that we can format and upload media content for the 4 screens which are attached to the unit. And responses from operators is very strong, and so that we are getting demand now for rebookings, and obviously we have got now people who have seen this as a mainstream channel to market. Interestingly, we decided to bank some of the 2016 revenue. 2016 revenue in 2016 for the MPKs rather than bank it in 2015. Gregor will talk to you a little bit more about revenue recognition for the MPK. We wanted to do slightly different to our normal promotional deals, primarily because we want to iron out or attempt to start to iron out the end of year bias to our business. We aim to have between 80 and 100 MPKs developed in the UK and established by the end of this year. And if we can do that, then you can see that it could easily be between a £5 and £6 million turnover business in the UK alone. When we started, we thought 1 unit per venue, 2 is now the norm, 3 is not exceptional. So we do see that there is a tremendous opportunity for growth of these units. Other than that, in the UK, performance was down 15%. This is due to material loss of Manchester Arndale. However, we are also moving the MPK revenues from 2015 to 16. That was about £150,000 turnover, which we could have put into 15, but we posted into 16. As we said, revenues from brand experience into Network Rail has increased tremendously. RMU sales were down. This was due to lower than average units due to Into coming out at the end of last year. We have, though, changed the way in which we look at RMUs in how we offer this out to the market. Previously, it was RMU sales were down to any colour you want as long as it's black, with a 5-year contract. And we've really, by going back and talking to our shopping centre clients and the retailers, they're saying that they don't want 1-year contracts, they don't want 5-year contracts. What they would really like is short-term pop-up retail at critical times of the year, such as Christmas and Easter. Last year we delivered 30 pop-up units into UK shopping centres. Just remember, there's no capex involved in this. These are units which we've taken off the malls, we've reconditioned. We have the logistics teams, we have the sales teams, and we've got the retailers requiring them. We just never had a contractual framework in which to expedite this business, but that's going really well. And overall, the combination of pop-up shops, MPKs, and greater brand experience revenues being driven by Network Rail means that we're a lot more confident about UK sales activity in 2016 than we were in 15. Overall, Germany had a pretty good year. Revenues were from the promotional side were around about 15% up. We hit Forex headwinds. That cost us about £60,000 in our figures. However, we have got a good pipeline. The Germans started well the first 3 months of the year, and the rest of the year, as far as we can see at the moment, is working quite well. We've only got 7 MPKs operating in Germany. That's lower than we'd anticipated. However, we've had a bit of a reorganisation. We've put some people dedicated to it, and we have got a target of between 20 and 25 MPKs in Germany by the end of 2016. This won't come from any one large portfolio. This will be achieved by talking to individual smaller venues, of which we've got a pipeline building in Germany. End of last year, we signed an extension to our RMU retail contract with Retail Profile Germany and to ECE. That goes until 31st of January 2018. It meant that we could reorganise our minimum guarantees so that we came out of underperforming shopping centres, and we were able to lower the minimum rents in some shopping centres as well. This means that the team will be able to concentrate on a lower number of RMUs. Hopefully that should aid profitability and occupancy. Gregor will talk to you about recharges back into the UK. Apart from driving MPK, new venues and new retail operations, we've also had a keen eye on our overheads. We've managed to bring those down quite significantly. I'm always looking at how we can keep costs down. But overall, I'm very pleased with the way in which we've controlled expenses and driven new products this year. The other things that we are looking at, obviously, is Space and People Plus, and which is under the umbrella of Space and People Ventures. Space and People Ventures is the banner that we give to our new development companies and companies overseas. Just a quick run through on those. Russia, which pays us a royalty, again, didn't pay us a royalty and probably will not pay us a royalty in 2016. The combination of sanctions and low oil prices has really hit that business hard. If it does survive, then it'll be a great effort. India has washed its face this year, and although the promotions business won't really drive massive amounts of revenue in 2016, we see that the support services to McPherson & Valentine sunglasses will maintain profitability and should extend it in India. We ended last year with 27 sunglass kiosks in and around mostly Mumbai, and we will now got a platform in Delhi, and we hope to be expanding that. But nothing massive to report on Space and People India. Our other UK business, which we started a couple of years ago, was Space and People Plus. Plus was developed to support above-the-line agencies and media buyers to actually spend some of their advertising budget into UK and overseas venues. 15, although the revenues were slightly lower than 14, it actually made us for an easier life in that there wasn't one huge contract that they were trying to transact which came in at the end of the year. It was broken down into lots of much more manageable pieces of business. So although we did less revenue, strategically it's in a much better place than it was. And although they are behind the curve beginning of 2016, the pipeline is pretty strong, and they hope for, what with the Olympics falling this year, that they'll see international budgets being developed, which will want to be spent in UK and UK venues in particular. So all in all, we've seen the transitioning of the UK from our standard banking business, our banker businesses of large-scale retail, and doing much more nimbler with pop-up retail with MPKs, and of course with the fantastic win of Network Rail, British Land and Emotion. So all in all, we're quite pleased with 2015. The number could have been better if we hadn't invested in France, hadn't taken the numbers from MPKs and put it into 2016, and hadn't had Forex movements against us. But all in all, we're very pleased with where we are and how we started the 2016. Talk a little bit more about revenue recognition into MPKs and any of the more in-depth stuff regarding the numbers. I'll hand you over to Gregor.
Hello everyone. I think it's important for everybody to understand why we did what we did in terms of moving revenue from 2015 into 16. The mobile promotions kiosks are a product which is more akin to the RMUs that the business has had for a long time, where somebody books onto a unit and they can book for various points in the future, various dates in the future. And in the past, on the UK promotion business, where effectively we were broking deals, we would recognise our income when we signed the deal. Because we are renting this space effectively and then putting people onto it, it seemed more conservative and more realistic to recognise the income as the event actually happens rather than when it was booked. That gives us far better visibility of sales forward than the business has historically had. As many of you know, in the past, the key months for us have been October, November, December, where we wait for a large bulk of our income to come in that period and a large amount of our bookings to be signed. That hasn't been the case on the RMU side of the business, where we've had forward visibility much earlier in the year. And by treating MPKs the same way, we're looking to develop that as well, so that we have a far better view much earlier in the year of how the year is going, and it makes it easier to manage as well. In order to get to the numbers that we did in 2015, we felt that we could get to an earnings per share level which was appropriate and which the market was expecting. We came in at 4.3 pence, and we were able to do that without having to take this income into 2015, and we felt it was beneficial for the firm to change that. That isn't something which will be a win in 2016, where we'll effectively double count income. At the end of 2017, again, we will have deferred revenue into 2017. So it's just rolling things forward consistently going forward. On the German business, Matt mentioned also that when you look at the year-on-year comparatives and our segmental analysis for the German business, it looks like that the German businesses have performed more poorly than they had in the past. Part of that is down to the forex movement between the pound and the euro that we're all aware of during the year. But also we recharge for management services and for license fees to the German businesses, so that they bear a fair proportion of the central overhead, so that every business is paying for the amount it uses. And in Germany in 2015, we provided a greater level of central support than we had in the past, a greater level of accounting support, where we're changing how we do that and bringing accountancy in-house, whereas previously a lot of it was done externally by a professional firm in Germany. So it makes Germany look poorer than it actually runs as a separate standalone business. It also has the effect of bringing the required level of profit into the UK and is taxed as UK profit, rather than being subject to taxation in Germany at a higher rate, where it isn't actually appropriate that that much profit should be taxed at that rate. And that has helped to keep our blended tax rate at the required level and at the level which is appropriate for the business. The method of us doing this has been pre-approved by the UK and German tax authorities, so we're not playing fast and loose with our taxation policy there. Anything else you would like me to cover, Matthew?
Talk about cash flows, I
Yeah.
suppose.
If we go on to the cash flow, you'll see that in 2015, cash flow hasn't been as favourable as it had been in the previous year. There are a few reasons for that. Firstly, on the working capital side, at the end of 2015, we had paid our shopping centre creditors much more up to date than we had at the end of 2014. That's really just a timing difference. At the end of 2014, we didn't actually pay some of the groups until early 2015. At the end of 2015, everybody was fully paid up at the end of December, in line with how it should be done. Also in 2015, as a result of winning the Network Rail contract, we had to put £400,000 into escrow with our solicitors for the duration of that contract, to act as a guarantee effectively of 6 months revenue that they would expect. That doesn't show as a cash item because it's tied up for longer than 1 year, so it sits out with cash, which is another drain on our cash during the year. And thirdly, we spent more on capital expenditure than we have in the past, as the mobile promotion kiosks have rolled out quite significantly during the year. When we started off with this, the mobile promotion kiosks were being sourced in the UK at a set price, but now we're sourcing them at a cheaper price and at a higher quality from a foreign manufacturer. So we don't see the investment being quite so high in 2016 as we continue to roll it out compared to 15. Also in 16, we don't envisage any significant change in the working capital side of the business, so the operating cash flow should return to normal, which is more like the 2014 levels. So in 2016, we will hopefully pay a dividend that if it gets approved at the AGM, and we're able to finance the business going forward without any issues. Post-year end also, we've renewed our banking facilities with Lloyds, and we now have banking facilities out until July 2019, which gives the company significant headroom to grow further as required.
Okay, so in summary, 2015 was a year, as we said, of transition, which enabled us to bring these new products to the fore, MPK's Pop Retail. It really was significant winning King's Cross and British Land, both for the confidence of the company and for the workforce, and for ourselves, and for our investors, obviously. And we see that those key areas will be the driving force for the UK. Germany started the year in line, as has the rest of the teams. So all in all, currently we're extremely hopeful regarding 2016. I believe we are now open for questions.
Right, thank you very much, gentlemen. And again, I shall encourage people to email questions in. We have quite a lot already, so let's dive straight in. In terms of the competition that you face, as you point out in your statement, quite often it is customers who take revenues in-house. Could you comment as much as you can about how that might be represented in a churn rate, i.e. how many existing clients might have left in the past year, and indeed how many clients might have returned in the past year if your clients do actually find it too much hassle to administer the proper proposition in-house?
Well, British Land is a case in point. We used to work extensively with British Land across their shopping centre portfolio, particularly Meadowhall in Sheffield, where we had an excellent working relationship with the on-site team there. They changed some internal policies. They said they were taking it in-house, but they didn't really do it all that effectively, I guess, because they've come back and they wanted to talk to us about the whole portfolio, not just the shopping centre estate, but also the retail park estate, and in fact office blocks as well, which is an interesting thing which we'll be looking at. So that is a case in point whereby a portfolio made a conscious decision that outsource is the best rationale for doing that. There are clients that did take it in-house, and we monitor their activity by mystery shopping and going into just effectively scanning what's going on in their mals. These companies tend to make a longer term investment in this. They're not going to change their minds anything imminently on changing this. However, we are always presenting to them all the opportunities that they may have missed, and that we are really the central selling and buying hub for large-scale branded activity in the UK. The only there's no significant contracts which we will be, which are up for grabs this year. We know that White Rose Shopping Centre in Leeds will be taking its kiosk business in-house. That was already budgeted for and planned for. And we are in discussion with them to roll out pop-up shops over Christmas for the Christmas season 2016. all in all, we believe that offering a holistic service of every single Space and People element is probably not where the market's going to be. We probably see that people will want product solutions. Maybe it'll just be MPKs, maybe it'll just be pop-up shops, maybe it'll be an element of the two. It could just be brand agency business. However, at least we have got the relevant teams to deliver on all those. And we'll keep you posted if we win anything new.
Okay, thank you. Moving across the channel, when might you expect to see visibility of how the French rollout of the MPK programme is being received? And on a slightly bigger picture question, are German or French shopping centres actually set out physically in ways that make them more or less suitable than those in the UK?
The pilot with Auchan is with 5 of their larger centres, 2 in Lyon, 1 in Annecy, 1 near Paris, 2 near Paris and 1 in Bordeaux. The units were installed in February. We have native French speakers based in Glasgow, so French advertisers phone a Parisian telephone number and it's answered by a Frenchman. We will be evaluating that towards end of Q2, probably mid Q3 after the summer holidays, so September time. We will be looking at that both from a booking activity and an operating activity. We have started to make bookings in France. Auchan are very happy with the product and the way in which that we've installed and begun the operation. Potentiality wise, if you can imagine a large hypermarket, say 20-25,000 square meters, with a typical shopping centre of between 50 and 75 shops bolted on, that's a typical setup of a Auchan shopping centre. They've got 89 of them in France. They've also got 50 in Spain, 50 in Italy. We can easily see accommodation for 2 units per location, as long as demand from buyers is sufficient. We're currently starting with 1. Obviously, it's a tremendous opportunity if this works, both for us and Auchan. And you might ask the question, you know, for a company worth 64 billion euros, why would they want Space and People small MPKs? Well, the issue is that it's not necessarily the revenue which is attracting them to this product. It is the fact that it's cleaning up their malls, and the quality control element of improving mall experiences is going to be key for all shopping centre owners, with the threat of online and the threat of how do you keep footfall coming in. So we're working very hard. It's a low cost base. We anticipate costs of around about 100,000 that we will have to incur this year with that product, and we will keep you posted. But started okay. I'm happy.
Thank you. Now back across the channel. There's been a lot of speculation about Network Rail being broken up. Does the recent Shaw report put an end to that? And if it was to happen eventually, how might that affect your contract with them?
Gregor, do you want to allude to that one?
Yep. Our Network Rail contract is for the major terminuses in the UK. As far as we see it, the report where it was predicting or anticipating the breakup of Network Rail was very much to do with the infrastructure and not so much to do with the operation of the concourse space in the major railway stations. Our contract is for 5 years. We don't see anything particularly changing within 5 years on that contract, and we don't particularly see anything changing much beyond that either. People will still want to drive income from their assets. If they are owned by a different company, or if they are split up and owned by various different companies, we would still hope that we would be able to transact with them on a group or individual basis, hopefully having delivered a good service over the term of this contract. If something does happen, I anticipate it being longer term before it affects us.
Okay, thank you. Looking at other international markets, have you looked at opening operations in Europe beyond France and Germany? Or is this a development that might in the future be client-led, given the scale of the partners that you're working with?
We have done quite extensive market research into the European market, looking at Poland, looking at Spain in particular, but the problems in the Eurozone really didn't warrant us looking to expand into those areas. Client-led is definitely the lead. If we do well with Auchan, they have, as I said, 50 shopping malls in Spain and 50 in Italy, give or take. That is being controlled by our contact in Paris. So if we do well in France, they have said that we would want you to go to other places. Really, the board under Charles Hammond, the chairman, is very, very intent on making sure that we are focused on the UK, France, Germany, and that keep close to home and stick to the core markets.
Right. British Land, what pace of rollout do you foresee for their portfolio, and when might it reach full speed? And does that mean a significant upfront investment by you in both people and MPKs?
No significant investment. Most of the costs we have already created our sales team people based in Glasgow. That's easy to expand or contract that depending on demand. We don't see British Land really hitting its straps until middle of this year, predominantly because most of their retail parks are outdoor. They do own 30 of the top 50 retail parks, I think is the figure, in the UK. It's a new departure for us. We have got a large sales pipeline ready to transact for them. A lot of this is tied up with local government waiting for planning consents and authorities for things such as eco car washes. But also, shopping centre groups don't just recruit us because of the revenues, it's also the change management which we help to foster, and we are working with British Land on that. It is slower than normal, but the potentiality is huge. We have budgeted accordingly.
Okay. You've placed a lot of significance, understandably, on your major clients and the wins of Network Rail and British Land. Roughly what proportion of your RMUs and MPKs would you expect to be absorbed by them, say, in a year's time?
Well, Gregor, do you want to give a thrash at that one?
On the Network Rail contract, that's predominantly a promotions and brand experience contract. There will be MPKs being rolled out to the stations, but it will be roughly about 10% of our MPKs in the UK will be in stations, although we would expect them to earn good revenue compared to other venues because of the footfall and the demographic that people can get to by using these MPKs in that environment. In terms of the RMUs, neither of these contracts are going to be particularly high users of RMUs, especially to begin with. Our RMU programme in the UK, whether it be permanent RMUs or RMUs on a pop-up basis, is centred around our existing clients other than those people, and also around new clients that are looking for short-term pop-up opportunities, and they can be individually owned shopping centres or other venues, and not necessarily people that we are currently dealing with. It's a good way to get into new clients as well, with an opportunity which is attractive to them, whereas the previous large-scale holistic approach wasn't attractive to them. So the answer to that question is British Land, Network Rail aren't going to be the particular focus for the RMUs, and slightly the focus for MPKs.
Right, just time for a couple more. In terms of innovation, and you just referred to the pop-up retail solutions, have you got any other innovative products that you've been trialling or rolling out in the last year? And if so, how are they being received?
No, nothing really. I mean, we've been learning about the MPKs. I mean, this is the current version which is being installed at the moment is now evolution number 4, and we are learning all the time. If you look on the screen, I don't know if you can see, we've developed vinyl wrapping for the MPKs. This allows an element of bespoking, and we found a really innovative way of doing this at a low cost, whereby the graphic which you can see is in fact magnetized templates which actually stick onto the unit. We have found this magnetized sealant which gets coated onto the unit, and then these magnetized templates get set, which we do on with our own in-house team at a cost, and are sent out. Incidentally, we did a presentation to 4 potential users of the MPK where we showed them different Photoshop mock-ups of what their unit would look like with different template designs. 6 vinyl wraps were purchased, and almost £50,000 worth of bookings were transacted by allowing brands this level of bespoking on the unit. So we will be making sure that the MPKs dig in, making sure that pop-up retail digs in, but really and making sure that all our current clients are well serviced. That's as far as we want to go this year.
And then a final question, looking forward to revenue projections that have been provided by commentators on the company, which see revenues to around £15.6, £15.7 million in 2017. Obviously those forecasts belong to other people, but which areas of the business give you the most confidence that there will be significant growth from the results just reported?
Well, the main been MPK sales, it's been large agency branded sales into Network Rail and to other large scale locations. Everyday business with RMUs and pop-up RMUs. These are our key business areas. The growth I'm forecasting will be in creating product-orientated solutions to UK shopping centres, whether that be one specific product or 2 specific products at a higher marginal rate, and with us controlling the vertical. That's how I see the development of revenues for expanding out of 2017 onwards.
Right, well thank you very much Gregor and Matthew for your clear answers, and thank you to our audience for their questions. There is of course a recent equity development note looking forward with forecasts on the company available on our website, but for now I wish everybody a very good